So let's talk about how we got here. Right now, there's a lot of things to be worried about. The level of worry in this country right now seems like it's as high as we've ever seen it before. Oh my goodness. I am so worried. He's worried, she's worried, they're worried, all this stuff to worry about. And what are we worried about? Well, we are worried about the monster deficit, right? The government's spending all this money, we're going to have a huge deficit. We are worried about the fact that the economy is changing and it's a new economy and the Chinese are taking it over and we're not manufacturing anything and the world is different. Hey, are we in a socialist world now? Do we have a socialist president? The government is taking over these businesses and banks and car manufacturers, and clearly, can capitalism survive in a world like that? Here's another thing. Let me ask you this. Are we going broke? Is this country going broke? With all the money that the federal government has been spending, are we going broke? It's an interesting proposition. And clearly, all these worries that we have right now are different. It's different than it's ever been before. Well, I'm here to tell you it's not, because this Time magazine cover about the deficit is from 1984. In 1984, the black hole of deficit, and guess what? Our country is better, more successful, the stock market is higher, and we are more prosperous than we were in 1984 when they were worried about the deficit. Oh, the new economy, 1983. How about this one? Can capitalism survive? July 14th, 1975. The Ford administration. And this one, is the U.S. going broke? March 13th, 1972. So when you hear people tell you this time is different, oh, these worries that we have right now are different than anything that we have ever faced before in the history of this country, don't believe the hype. I'm here to tell you tonight that we've had these worries before. Okay, it seems more intense because, as it turns out, we live in the present tense. Okay, now we live in a world where we have Fox News and we have CNN and we have CNBC and we have Beck and we have there's all this content that's out there that we didn't have in previous times. And so it's easy to get caught up in this. But I'm telling you, it is really, really not different. Now, one of the things that has happened to people in today's world is that with investing, it's really easy to get caught up in these headlines, in what's going on right now. And you know, CNBC, God love them, I do. I have the unique and wonderful privilege of getting to go on CNBC on a regular and recurring basis. And that's been a good thing because it allows me to spread the gospel of Adam to a national audience. Okay, but these people, they have to fill 14 hours a day worth of programming. 14 hours a day. Oh, and by the way, I was in New York, a month and a half ago. We had dinner with a woman who's a producer at one of the financial networks. And she said, you guys, we love it when the market's really volatile. In fact, we can see our ratings are directly correlated to the volatility of the market. And that's what they want. They want this volatility. And they want, when you've got 14 hours a day, you got to talk about something, right? Okay, now, besides me and these people who work with me, how many people in this room watch CNBC for 14 hours a day? Oh, I'm not talking about ever. 14 hours a day. No, okay? It's just us. Now, but here's the thing, is that during that 14 hours, you might watch a half hour here, 15 minutes here, and if you happen to get the one guy who's on at that moment in time who has some scary theory about what's going on in the world, it's very easy to emotionally get wrapped up in those fears. So what we do instead, we have a different philosophy, and that is, I am not going to get caught up in those emotional fears or the day-to-day news. Rather, what we're going to do is we're going to start with the data. And that is, there is hard and fast data out there that gives us a good idea of what is really going on in the world, what is really going on in the economy. And I'm going to talk about some of that right now. Well, here's one of the things, the question a year ago today, the most common question I got to the radio show from all over the country was that people would say, Adam, the federal government is spending all this money, ridiculous amounts of money, and that is that's going to result in hyperinflation. You guys have heard that, right? Oh, the government's spending money, and that means there is like a quid pro quo. Government's spending money, we're going to have inflation. I said, I don't see it. Well, let's take a look at the inflation rate. There are two lines on this chart. The blue line is the total CPI, what are they? Overall CPI. The yellow line is the core CPI, and that takes out food and energy. And it's not, we believe that that is a better measure of what the real inflation rate is. And it's not that all of us in this room don't have to buy food or don't buy gasoline or other energy products. It's that the price of oil goes up, the price of oil goes down. It's much more volatile than the price of all the other goods and services. And what you see is that over this period of time, which goes back to January of 2007, the rate of inflation has been very low. And the reason that inflation is not a problem right now is nobody has any pricing power. I can tell you that if you wanted to buy an LCD television, a flat panel television 2 years ago, you would have paid $3,000 to $5,000 for that TV. You can now buy those TVs for $400 to $1,000. Okay, if you buy a TV, today, this very day, I went and I bought a car because my twins are turning 16 and went and bought them a car. I went in there and I did my homework. And I knew what the sticker price of the car was, and I knew what the dealer's cost of the car was, because that information is readily available on the internet. And I went to the dealer and I said, here's the deal. I want to buy this car. I'll pay you $100 over invoice for it. And he went back, let me check with my boss. Goes back there, came back. 5 minutes later, he goes, we have a deal. Boom, done. Okay, if you buy a car, you expect to get a deal on it now. If you buy clothes, you expect to get a deal on it. Nobody has price, nobody can raise, everybody wants to raise prices, but they can't, because in this, everybody knows we're kind of in a shaky, weak economy. We're recovering from a recession, and people are not willing to pay more. So there's no inflation. Those of you who are drawing Social Security, how much of a raise did you get for inflation this year? Zero. Okay. Do you know why? Because there's no inflation. I'm sorry, it's not happening. There are many who would like you to believe that the economy is terrible, is continuing to be terrible, and there's no sign that this economy is getting any better. Well, let me show you something. The manufacturing sector. This is a chart that shows the ISM index, and what the acronym ISM is not important. What this is this is an index that follows manufacturing activity in the United States. And the black line that is in the middle of this chart is 50. And anything above 50 shows growth in manufacturing. And what you see is that since August of 2009, manufacturing activity has picked up. For when we were in the dark ages, that was the fourth quarter of 08, first quarter of 09, nobody was making anything. Companies were trying to reduce inventories. They were doing whatever. I'm not making anything. I can't sell anything. I'm not going to make anything. We're going to lay people off. Well, guess what? It's coming back.